Welcome to the new investingLive.com, formerly ForexLive.com. Happy to be on this new site, a new launch for investingLive and .com, and look forward to serving you in the way that we've always have at ForexLive, just with a new name and some new information for you. So it's a great day, and we look forward to going forward. In this video, I'll take a look at the technicals that are driving the three major currency pairs. We're seeing the dollar-yen move to the downside, the yen move higher despite the ruling coalition losing its majority in the upper house of parliament. That puts some problems with things like the trade negotiations with President Trump and his administration. And despite that, and the possibility of recession in Japan as well increasing, and despite that, the yen has been the safe haven currency. Go figure. And we're seeing flows into that currency and out of the U.S. dollar to kickstart the day. The euro versus U.S. dollar is higher. The sterling versus U.S. dollar is higher as well. So dollar overall is getting hit in trading this morning. I'll go through the technicals that are driving each of those major currency pairs for investingLive.com. We'll start off by taking a look at the hourly chart of the euro versus U.S. dollar. What we saw in trading last week, or last Friday, I should say, was a move up toward that 200-hour moving average. Recall, this is the Powell is going to be get fired day, and the price, the dollar moved sharply to the downside. The euro moved above that 200-hour moving average. And on Friday, we moved just a little bit above that level, but sellers, as you can see, came in and forced the price back down to where we closed below the 100-hour moving average. And trading here today, what do we see? We saw the dollar initially move up and down in the Asian session before starting to follow maybe the dollar yen's move to the downside and extend back above the 100-hour moving average. What we did do at the lows was hold support against this swing area. This swing area was defined through here, going back to here, these highs right through here as well. So it all started back here, folks, before the market moved to the upside, and then we came to this last week where the market traded above and below the level with it, still a number of different times that the price came up toward that level where the moving average and found either resistance or support. And so holding support right here against the 1.1614 level was an invitation to move higher, and indeed the price has. We're entering the U.S. session with the price moving above the 200-hour moving average, making another attempt to get above that key moving average level. Can we stay above that level? Can we move above the 116.63 to 91 level? Recall that level from our daily chart. Go back all the way back to this period right through here, April to November. It's become a broken record for those people who follow my videos. A number of different times that the price came up to this level, either as support or resistance back here before moving to the downside. We returned back to it, and then we tried to stay above that level all through the last few weeks of trading. You can see that off the hourly chart, this area right through here. That's it. Yes, we had little moves to the downside. I kind of said we may be losing some momentum. Indeed, did. Broke below that level. This is a Powell day, and then we moving back up to that level. So we need to get above the 63 to 91 level and stay above the 200-hour moving average to increase the bullish buy. So we can't stay above the 200-hour moving average. When we start to do what we did on Friday, we'll look back down toward the 100-hour moving average once again, and the low of today's trading day, the low of the swing area, these levels right through here. Let's take a look at the dollar versus yen. As mentioned, the yen has been strengthening, and like the euro versus U.S. dollar, we're cracking below the 200-hour moving average. That's this green line right here at 147.696. We came down to it earlier today, found support buyers moved marginally higher, but could not get above this line right here, which happened to be this high right here. And we rotated back to the downside, and we're now breaking below, or trying to break below the 200-hour moving average of 147.696. If we're able to stay below that level, then we look toward the broken 38.2% retracement. I might also let me put a Fibonacci on this move to the upside to measure that retracement level out as well. This 38.2% retracement is a lower one. The higher one is of a longer term move. In fact, I'm going to take that one out right if I can find it right here, and focus on the corrective move lower off of this move higher So we'll put that back right through there and look at the 38.2. So there's a lot of room between the 200-hour moving average and the 38.2% retracement. We also have that Powell low that we saw in the dollar selling on that, I guess, Wednesday's trade that we need to get to and through on the downside. But the goal is, if the sellers are going to stay in control, we need to stay below the 200-hour moving average. Alternatively, we'll look toward this high right through here as a resistance level at 148.019. That was, I guess, the June high. And if we stay below that level, that would keep the sellers more in control, and we focus on the downside. If we can't stay below the 200-hour moving average, and we start to get above the 148.019 level, let's say you don't think the news in Japan is great for that currency, that the yen might in fact weaken, which you easily can, then getting above the 148.019, getting above the 100-hour moving average would be the next key targets on the top side. Finally, let's take a look at the sterling versus US dollar. Again, we'll focus on the hourly chart for this currency pair. And unlike the euro, unlike the yen, we are still below its falling 200-hour moving average. It's a green line in this chart. We're also below the 50% retracement of the move up from the May low to the high price that we saw July 1st. So these two levels are in play right through here, along with the high from Friday and the high of the swing area right through here, which goes back in time. So there's a lot of stuff here between 134.63 and 134, looks like 75. 63 to 75, if we get above that level, that would be more bullish for the pound versus US dollar. If we find sellers against that area, then look for a rotation back to the downside. The 100-hour moving average is right near this swing level right through here, which we earmarked just because we had two separate lows right at that level, and then we came back here and we found a low right there, and we found a ceiling right here, and we tried to stay below that area right through here and held it right through here before breaking to the downside in early Asian trading here today, and then failing and moved back to the upside. So this level is increased its importance at the 134.13 level. Move below that level, it's more bearish, but right now the focus is in between the 63 and 75 level. Get above that, more bullish. So there you have it. A look at the three major currency pairs to kickstart your day on investinglive.com. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.